Hello everyone and welcome back to our educational videos. And today's topic we are going to cover how to trade a breakout. Before starting our lesson, I need to remind you, please like and share our videos and subscribe to our YouTube channel. Let's start our first topic in this video. We are going to show you what is the difference between a fake and a real breakout. As you know, many of you have difficulties to differentiate between a fake and a real breakout. This is why we did this video. Plus, we will show you how to benefit from it and when to consider the breakout as a real or fake one. So I will start to show you the difference. As you know, when the market approach critical areas, or we call them resistance and support, the market shows these movements. So if we have this resistance, the market goes above it and then comes back below it until the market goes above it and start to trend to the upside. Similarly, when it comes to the support, you can see that the market make small movements below it and then goes above it like that until the market trend to the downside. So these we call them as fake breakouts, either to the resistance or support, we call them as fake breakouts. And when the market succeed to break the resistance, we call them as a real breakout. And here, when the market manages to break the support, we call it as a real breakout. Let me give you a real example. So here, as you can see, we have support and resistance, or you can call it as well as channel. These we call them as fake breakouts. The market or the price goes above the higher end of the channel or above the resistance and then comes back below it. And this is a fake breakout. Okay, these are fake breakouts. They are really annoying, especially if you trade above and below these critical areas, because you will most probably be stopped out. So what is a real breakout? Let me show you a real breakout. This is now a real breakout. So the market succeeded to break above the channel with this candlestick, and this is, we call it as a real breakout. Now let me show you how to differentiate or how to know that a breakout is a real one or a fake one. There are two indications that I will give you to know that most probably a breakout will be a real one. So whenever the market approach a critical area, let's say we have a resistance here, what you will see most of the times is that the market will test many times this area, and then it will show a low volatility here. This low volatility, we call it as accumulation. So the market start to accumulate some buyers to be able to break this level here. So this is our first indication. Second indication will be a big candlestick that is above this resistance. I'm giving you an example here on the resistance, but it could be on the support. But to simplify our example, I gave you this resistance. So to know that a breakout is a real one, you should see also that the candlestick closed above the resistance. And we should see a big body that is bigger compared to the other candlestick before it. So first indication, the accumulation part. Second, a big candlestick or a bullish candlestick in our case here, because we are breaking a resistance, a bullish candlestick with a big body comparing to the previous ones. So after seeing these two indicators, most probably the market will rally and this will be a real breakout. Let me give you a real example here. If I go on the BTC USDT chart, you can see that the market here, let me go back in time. You can see that the market failed many times to break this level here. Okay, so we call this as fake breakouts. But what we saw after is an accumulation. And usually when we have an accumulation, so to be sure that you have an accumulation, you should go and apply this indicator here. We call it volume. So when we have accumulation, the volume is low. So here we have high volume. Here the volume is low. So first indication, the accumulation. Okay, let me make the graph clear. So we have accumulation, and then the market posted a bullish candlestick. Since we are breaking a resistance, if you are breaking a support, you will see a bearish candlestick with a big body. You can see the big body of this candlestick comparing to the previous one. So this is our second indication, and after it, the market rallied. So if I continue from here, you can see that this is a real breakout. Let me give you another example here. We have the Doge USDT. So the market failed to break this resistance. We have here fake breakouts. After the failure, we can see this accumulation and low volatility. If I go on, or if I apply the volume indicator, you can see how low the volatility here. And then if I go back in time, let me go back in time. You can see that the market posted a big candlestick, bullish one, with a big body comparing to the previous one. You can see the body of this candlestick. We have a big body, a bullish one that closed above the resistance. So this is our second indication that this breakout is a real one. And you can see after it, the market rallied. Okay. Also, we can give you another example here on the XRP. So similarly, the market failed many times to break this red resistance. We have accumulation, low volume. So first accumulation, we will wait to the bullish candlestick above, that is closed above. Let me go back in here. So we will see here that we have a big candlestick above the resistance. So it is showed. We have a big body bullish candlestick above the resistance line, the red one, and then this is a second confirmation that we will have a real breakout and the market rallied. Okay, so this is how you can know that a real breakout might occur. Accumulation with low volatility, if you would like, and then a candlestick with big body. Whether if we are trading a breakout of a resistance, you should see a bullish one. If you are trading a breakout of a support, then you should be a bearish candlestick with a big body. So this is it, guys, for today's video. Hope you like it. Thanks for watching and see you in another one.